Welcome to the afternoon run. I am your host Grace Matthews, and to my left is my co-host partner Ethan Hunter. For this edition we will talk about Facebook and the bank's lawsuit over pre-IPO analyst calls. And now we move to Ethan with more on this story.
Yesterday the social networking firm was sued along with Morgan Stanley, Goldman Sachs Group, JP Morgan Chase and other underwriters by investors who asserted the defendants concealed Facebook's declining growth forecasts in advance of its $16 billion, $20.4 billion IPO. In addition to that, the defendants, who also include Facebook CEO Mark Zuckerberg, were indicted of masking from investors during the IPO marketing process a rigorous and noticeable decrease in revenue development forecasts.
Besides that, the investors stated the members of a proposed class action or assembly lawsuit have lost in excess of $2.5 billion since the IPO last week, according to a protest filed yesterday in the Manhattan federal court. Moreover, Facebook spokesman Andrew Noyes stated in an email, they believe the lawsuit is without warrant and they will defend themselves exuberantly. In a separate case, a Facebook investor sued the Nasdaq Group on Tuesday in the same Manhattan court, disclosing the exchange was gravely mismanaged trades in Facebook stock.
Aside from that, the IPO was ruined on its first trading day when Nasdaq's platform was flabbergasted by order withdrawals and updates that made the stock market operator incapable to finish the auction necessary to open. Additionally, the stock unveiling was postponed more than 30 minutes. Likewise, Mr. Robert Garofeld, the CEO of the Nasdaq stock market, has documented to shareholders of Nasdaq's parent company that obviously we had inaccuracies inside the Facebook listing. Also yesterday, a similar lawsuit by a different investor was filed in a California state court, according to a law firm involved in that case. Plus, yesterday, a related lawsuit by a different investor was filed in a California state court, according to a law firm associated in that case.
Conversely, the case in New York, shareholders stated research analysts at numerous underwriters had reduced their business forecasts for Facebook during the IPO process. Nevertheless, that these changes were selectively released by defendants to specific preferred investors rather than to the public normally. The complaint stated the worth of Facebook common stock has faded considerably, and plaintiffs and the class have experienced detriments as a result. Nonetheless, representatives of Facebook and Morgan Stanley didn't directly respond to invites for comment.
Equally essential is that federal and state regulators stated on Tuesday that they were investigating into a variety of concerns surrounding the Facebook IPO, comprising whether big investors obtained key information that wasn't available to all investors, besides that Facebook shares dropped by 18.4% from their $38 IPO price in the first 3 days of trading, diminishing the value of stock sold in the IPO by an excess of $2.9 billion. Nevertheless, Tuesday morning Facebook increased by about 4.2% to $32.31 at 10:54 a.m. New York time.
In closing, it seems like the Facebook drama keeps getting better and better, from increasing divorces to withholding information on stock to their shareholders. Begs the question, what else is going to come out from the shadows from Facebook?
So what do you, the audience watching at home, believe is next to come for Facebook? Please express your feeling with comments, likes or dislikes on this topic.